Hello, this is Alex Thorne, Senior Analyst here at Knight, and this is the Weekly Brief, designed to prepare you for the fundamental catalysts fueling global market volatility throughout the week. First, the markets are anxiously awaiting the pending electronic signature of a preliminary memorandum of understanding between the United States and Iran. Right now, it looks like it is going to cross the wire tonight. Looking at the electronic boards, crude oil is already down over 4%, while the S&P is up nearly 1%, the Nasdaq over 1.5%, and the Dow up 0.75%. Over in the metals, gold is up nearly 2%, and silver is trading nearly 4% higher. While retail money thinks this price action signals a definitive resolution, professionals recognize it is simply an initial letter of intent. Critical disputes regarding $24 billion in frozen Iranian assets, Hormuz shipping tolls, and nuclear enrichment parameters are deferred to technical talks next week. Expect persistent, tradable volatility across the indices, energy, and metals corridors, and be fully prepared to reverse your positions if this deal starts to unwind. Moving into Wednesday, June 17th, we hit the Federal Open Market Committee policy statement. This statement marks the official debut of Kevin Warsh as Federal Reserve Chair. This leadership transition takes place amid delicate political positioning from the White House, putting the central bank's independence to an immediate test. The consensus expects the benchmark interest rate to hold steady at 3.5% to 3.75%. With core producer and consumer inflation remaining sticky, an emerging committee majority is actively organizing a tough stance on inflation. The smart money is actively preparing for a rate hike, with the forwards already pricing in a 1/4 to 1/2 point hike over the next 9 to 18 months. Now let's break down the daily calendar of macroeconomic data. On Monday, the June Empire State Manufacturing Index is projected to moderate to 12.5 from May's hot 19.6 print. Simultaneously, the Federal Reserve's monthly industrial production report is looking for a modest 0.2% increase in output, with business equipment spending, fueled by the ongoing artificial intelligence boom, continuing to underpin national factory capacity. Rounding out Monday's morning pipeline, the NAHB Housing Market Index is forecasted to tick slightly lower to 36, reflecting persistent builder pessimism regarding present sales and buyer traffic. Combined, Monday's opening data confirms that factory and builder footprints are remaining stable, removing any immediate pressure from the central bank to ease policy parameters. On Tuesday, the focus shifts directly to trade and real estate. Driven by rising borrowing costs, housing starts are expected to cool to an annualized rate of 1,430,000 units, providing our lumber bourses with highly predictable technical boundaries. Right alongside housing, monthly import prices are expected to rise 1.3%, while export prices are projected to jump by 2.0%. This imported inflation directly erodes the real value of bond principal, forcing a rapid upward calibration across short-term yields. Wednesday morning drops the premier gauge for consumer velocity with the U.S. retail sales report, which is looking for a robust monthly expansion of 0.5%. Later in the morning, business inventories are projected to expand 0.5%, indicating steady restocking confidence, while the pending home sales index is expected to climb 1.4%. Because consumer spending and inventory restocking account for the bulk of total economic growth, this resilient data hands Kevin Warsh a clear economic green light to focus strictly on suppressing inflation ahead of the 1:30 p.m. press conference. Moving into Thursday morning, the post-Fed evaluation window opens immediately with a triple fuse data drop. First, weekly jobless claims are anticipated to recede to the 225,000 level, confirming that labor demand remains tight. Simultaneously, the Philadelphia Fed Manufacturing Index hits the wire, projected to surge from -0.4 up to a positive 11.0. Finally, the Conference Board's index of leading economic indicators is projected to print a marginal 0.1% uptick. Because its forward-looking building permit and factory components have already been processed earlier in the month, this composite index offers zero fresh information to an advanced execution desk. Compounding this entire risk matrix, the Friday session is the official Juneteenth federal holiday. All United States equity and debt cash bourses are completely closed for the day, while CME Globex operates on an abbreviated holiday session. Because market liquidity will thin out dramatically ahead of the three-day weekend, institutional funds will be forced to rebalance their multi-asset exposures with maximum urgency between Monday and Thursday. Trying to play profit over how the algorithmic trading networks will react to changing central bank leadership is a gambler's game. To survive as a speculator, you have to stop chasing the why of yesterday's news, maintain ironclad discipline, and be positioned to capture the move exactly as it occurs, both long and short. In this post, we've provided active links to our EMA analysis page. We have done all the heavy lifting to lay out the raw trend data, providing you with direct contract specifications, 5-day hourly charts for short-term swings, 9-month daily charts for intermediate trends, and weekly trend filters. You can apply our simplified rules to any live chart on the page to instantly qualify the exact pain-to-gain ratio of 40 liquid global markets yourself. But tracking the tape as these trades occur is only the diagnostic phase. To land true whale performance, you have to automate the execution grid. Our team handles all the daily grunt work, monitoring account risk, placing the entries, and automating the entire pipeline using Chart VPS and CQG integrated client to completely eliminate human fear and greed. We route our operations exclusively through premier exchange members worldwide to guarantee total price transparency, the strategic ability to utilize United States Treasuries to satisfy your margin requirements, and guaranteed liquidity back to your account within 2 to 48 hours in any major currency. Contact Peter directly using the terminal links below to explore the benefits of putting our professional trading team to work for your capital. Please note, due to regulatory jurisdiction and financial status disclosures, we may not be able to accommodate your account. But if compliance restricts us, we can refer you to a capable, fully licensed broker who can. Thank you for watching. Protect your principal, good trading, and we'll see you right back here after tomorrow's regular session settlement.